we done with the downgrade, given that we heard today, Mexico and the U.S. have failed to come to a deal? More talks will go on. We have the PMIs of the major economies also weakening. Have we seen the end of the downgrade to growth?
Thank you very much. It's a pleasure to have the opportunity. I think the important thing is that we're not done with the downgrades, so we could really fix the trade issues. I think it's going to continue to weigh on the global economy, and so it makes it even more important that countries work together to reach the agreements needed so that trade does not become interrupted globally, because it does have a negative impact.
To what extent can central banks play a part? We've seen how central banks have pulled back on the policy normalization. Can they counteract the impact of the trade war?
I think that helps, but that still doesn't solve the problem. You can't expect to solve a problem that's being created by disruptive trade by monetary policy action. Yes, it's going to shore up. I mean, the slowing down of quantitative easing withdrawal will help, but it's not the solution. So I think, again, we have to fix the problem at its roots. It's also going to be important for countries to continue the structural reform agenda that helps shore up competitiveness. But you mentioned earlier the uncertainty around investments. That's also critical. So greater clarity on trade policy is going to be important to avoid investors sitting on the sidelines, so that they're able to make their plans, continue to invest and promote growth.
You talk about uncertainty. People are pretty much divided right now whether there'll be a recession in the U.S. Mm-hmm. What's your own reading, and what are the indications you're looking at?
Well, look, the U.S. economy has been recovering. It's been doing well. I think that that will probably continue for a while, but the U.S. also needs to continue to put in place some of the measures. It needs to work on issues like infrastructure. It has some deep-seated structural issues that need to be resolved. So in the short term, yes, maybe not looking too bad, but even with the U.S., you can't underestimate the impact of the trade wars and what that will do to the U.S. economy.
And of course, China front and center. Is there a need for the PBOC to accelerate stimulus to provide a buffer to perhaps engineer a softer lending?
Well, I think the Chinese government is already doing some of that. It's being very smart about how it's responding, and it's using policy appropriately. It has to be careful that it doesn't go overboard, because you can stimulate significantly, and that will sort of take a lot of the heat. But at the end of the day, it's very hard to address some of the other negative impacts, of how you do it. So it's going to be important to do it in a smart way, to be measured, and to make sure that you're tuning into what is happening and you're not creating more structural distortion.
Define doing it the smart way. What would you like to see?
Well, doing it the smart way means at the same time, you can't just rely on the monetary policy levers. Just like I said earlier, you have to address some of the structural issues that the Chinese economy faces. You have to address issues in the financial sector. You have to address issues about being more open, allowing more competition. These are all going to be important. So you can't address the effects of all of these structural underlying factors with just monetary policy action.
Of course, when it comes to China, the focus is also on the yuan, whether it will break 7. What implications are there?
Well, look, I mean, I think it's not good to speculate about where a particular currency is going. I think it's
but
going
the yuan
to be...
impact emerging market economies, emerging market currencies.
Yes, it does, but again, I think it's going to be very important for the economies, whether it's China, whether it's the US, all the global economies, to focus on the reform agenda and address underlying constraints to their competitiveness, and that is going to be what's going to really shore up global growth at the end of the day.
What vulnerabilities do you see among emerging market economies? I mean, we saw how Indonesia was impacted, derailed almost in terms of its currency and its growth. Are there vulnerabilities out there right now?
Well, in the case of Indonesia, the government took strong action. The government responded in the right way with its different policy instruments. And that really helped the economy withstand and come out okay. They did, as a region, not just even in Indonesia, see a bit of capital outflow. But I think that they've been responding well. I think the vulnerabilities vary from country to country. In Indonesia, there are issues around the dependence of external capital flows, there are issues around the infrastructure deficit, even the human capital deficit. The issues will be different in different countries. And I think those are the issues that need to be looked at each country level and appropriate policies found to address them.
Are you confident that there will be no policy mistakes?
Policy mistakes?
Yeah, policy errors among governments and central banks in Asia?
Well, I think, the governments and policymakers in Asia are aware of what's at risk. I think they understand what happened last year. They understand where the vulnerabilities are. Some have high levels of debt and so on. And all of these are factoring into how they're conducting their policy. I think the policymakers, I have confidence that they will work together to find the right policy mix. It's probably not going to be perfect, but I think they realize what's at stake and the need to really understand the issues and act accordingly.
And in your view, what's the biggest risk for the global economy and for the Asian economies?
I think the trade issue is a big one. In East Asia in particular, these countries have relied a lot on trade for their growth. They're very much integrated into global value chains. And so addressing the trade issues are going to continue to be important. I will highlight again that even with the trade, they still have a lot of structural issues to address. Some of them have huge infrastructure gaps that they need to shore up. They have issues around their human capital and how you invest in human capital to build and shore up productivity. They have to work with the new technology and what that is doing in the workplace and so on. So several issues to address. But, if you look at these countries and where they've come from, how far they've come, and how they have been able to craft policies and respond in the right way, I'm optimistic that they will get it right.
Can you quantify the impact of the trade war? IMF's Christine Lagarde came out to say that if the trade war persists, it costs the economy $455 billion next year. What are your thoughts on that?
Well, look, it's you can cost or you can measure the impact of trade dislocation. If you take a particular tariff measure, you can look at the impact on the price of the particular good in question, and therefore through that the impact on demand for that particular export. And generally we also know that tariffs or increase in restrictions in trade dampen demand. So it is possible to estimate. Now the magnitude of that, the exact magnitude, I think you'll have to do a lot of sensitivity analysis around to make different assumptions and see what range of numbers you get. But the IMF does a lot of good analysis. I have no reason to doubt what they're saying, and their work is pretty rigorous. It is possible to illustrate and to demonstrate that trade restrictions can be very harmful.